Good afternoon. I am Sensei Kevlar. Welcome to the final day of Dojo orientation. If you've made it this far, and you still have managed to not trade and master your discipline over your profitability, congratulate yourself, because you have set yourself up for success on this journey. I've talked a lot about the mindset with regards to the way of the trader, and the mindset is really important because it's something that allows us to see the opportunities for profitability correctly and create them for ourselves. And I've talked a lot about different strategies for diversification and the mindset required in order to make yourself profitable long term. I've talked about diversification as being a form of strategy to keep you going long term when problems go wrong. An equally important part of the strategy for keeping going long term is accounting, and part of accounting is, of course, the inevitable taxes. And today I'm going to talk to you about how I manage accounting and how you might think about manage accounting. Now, I'm going to preface this by saying that I am not a CPA. I am not a financial financial advice, a registered financial advice provider. I am not a money manager. I'm just a guy on the internet with an opinion, and I've dealt a lot with Bitcoins and buying and selling them. And I know from experience that this can be a little bit of a sticky proposition when you're starting out, and you want to make sure that you are abiding by the correct laws and regulations with regards to your regards to the country and the state that you're living in. So, my first advice with regards to accounting and your trading portfolio is consult an expert. Talk to your CPA, make sure that you're getting the right advice for your region, and ensure that you're getting, make sure that you're taking the right steps in order to protect yourself. The last thing that you want to do is you want to find out that you have been taking the wrong set of moves and doing the wrong set of things a little bit too late. And that too late is when the tax man comes to get you. So here is how I have learned how to deal with Bitcoin and taxes. And there's a wonderful website for helping you to navigate this. It's called bitcoin.tax. And they have a frequently asked questions section, which deals with Bitcoins and taxes and capital gains and all of that. But I'm going to sort of briefly walk you through the mindset required to deal with this situation before we move on to the final part of our orientation, which is just a review of how exchanges work. So what we're going to do is just start by understanding that in most jurisdictions, Bitcoin is treated as property. And what that means is that when you buy or sell property with a traditional fiat account, what you're doing is you're undergoing you're undertaking a potential investment. And when you purchase something, like if you go to Namecheap and you buy a domain name using Bitcoin, or you go online and you go to some Amazon reseller and you purchased a physical good using your Bitcoin or your cryptocurrency. Well, at this point, what you've done is you have moved it from a blockchain into a traditional account. And when you move it to a traditional account or do any sort of sale, then this becomes a taxable event. And this is really critical because you need to be paying attention to this. If you're not paying attention to this, you're liable to get caught in a situation where you don't want to be. So the first thing that I recommend is anytime that you are moving money from a traditional spendable account into cryptocurrency, the number one thing that you need to consider doing is getting out your phone and taking a picture of the event. If you go to Coinbase and you say, I'm going to buy this much Bitcoin with this much dollar, taking money out of my traditional spendable account and putting it into Bitcoin, I'm going to get out my phone and I'm going to take a picture of that transaction. And I'm going to say, well, this is a case of me purchasing property and this is a sale event. And then anytime that I take it out and I do any sort of traditional sale event with it, again, take a picture of it. This is a sale event, and this is something that you have to pay attention to and account for in your taxes, okay? What we're talking about effectively at the end of the day here is capital gains and losses. So if you purchase Bitcoin and you then do some trading, and then you take more Bitcoin out, you're subject to capital gains taxes. Now, if you stay in Bitcoin, then what you've done is you've effectively held on to your property, and this may not be taxable. This is something that you need to ask your attorney about. But the point is that even though if you didn't go to a bank account, anytime that you go between fiat, any sort of traditional US dollar, into cryptocurrency, this is a sale event, and you need to be paying attention to it. And anytime you go from cryptocurrency into traditional fiat accounts, this is a sale event, and you need to be aware of the capital gains that you might end up needing to pay on your Bitcoin, on your cryptocurrency. Now, does this mean that any time that you buy Bitcoin with Ether or Ether with Bitcoin, that you need to pay attention to the sale that you're doing? Not necessarily. This again depends upon your jurisdiction. In my jurisdiction, this is something that if you are looking at if you're looking at a traditional account and you're looking at a traditional account, it very much counts. If you're looking at going from a GDAX or a Coinbase or one of those into US dollar, then it very much counts. However, there are additional properties out there, and when you trade one property from the other, you don't necessarily recognize a sale event. And so when you trade from US dollar Tether to Bitcoin, that's not necessarily a sale event. So let's talk a little bit about how US dollar Tether works. US dollar Tether is a company that issues US dollar Tether tokens. And what they do is they make you do a sale event on their website in which you put down $1, and for that dollar, they issue a token. They issue a token that's supposed to be worth exactly $1, and they charge you a fee for this service of issuing this token, and that's how they make their money. So the reason that I use so in this way, we might avoid traditional traditional sale events. You might not. You need to ask your accountant. You need to talk to your CPA about what the right move for your tax situation is and how to think correctly about this. With regards to the actual accounting, the reason that I use screenshots is because I'm lazy. Is because it's easier for me to get out my phone and take a picture of something than keep a really up-to-date ledger. I'll sit there and forget to do the ledger. But if I just get into the habit, if I just remain disciplined to this idea of every time that this occurs, I got to get out my phone and snap a picture really quick. Well, this is a 5-second event. I can just get out my phone, snap a picture, and this really makes it simple for me to sort of go to my CPA and say, hey, you figure out the situation. This is my capital gains. This is the money that came in. This is the money that came out. This is how much money. This is how much I've spent. This is how much I've earned. And then you do the accounting, because that's what your CPA is for. He's for figuring out what the right answer is for how to take all of your spending accounts on spending and take them and account for them properly in your jurisdiction. So you can get all kinds of US specific tax information. You can get this website here to download your events from the exchange and help you with a CSV export, import and export feature in order to help you prepare your taxes. My strong recommendation with regards to all of this, and this is really, really important, is that you pay attention. Part of being in the game long term, part of making sure that you have a plan for strategy for for longevity in this market is ensuring that not only when the market goes against you, you're prepared to get out your wallet and, buy down your position and make yourself more upside potential opportunity, but you're also prepared to deal with the tax man, prepared to deal with your state, prepared to, pay out what you are due according to the laws of where you are. This is really important. If you're not following the laws of your local jurisdiction, you're essentially taking on more risk than you really need to be. And so I really, really, really do invite you, before you get really serious about your trading portfolio, to consult with your local tax attorney, consult with your local CPA, figure out what the right strategy for you is, and plan ahead. Plan for longevity, plan for this situation here. So, moving on, somebody mentioned on YouTube, there's absolutely services on Coinbase to help you do this. There's absolutely, good options to help you get the information out of the exchanges. If you are having trouble getting the information out of the exchanges and you need help, contact your local portfolio automation specialist. This is what they do for a living, literally. They can absolutely help you with this. So, moving on now, I want to talk a little bit more about the basics of how exchanges work. Hopefully by now, you've been on YouTube enough and you sort of have a basic understanding of how wallets work, and I don't need to do a recap of, how to send and receive money between your exchanges. There's lots of videos on YouTube for how to do that. What I really want to focus on is something really important that a lot of people have struggled with initially, and I certainly, have struggled with it in the past. And that's the way that markets work. And this is a really critical part, because what happens is people go to do this and they see the chart and everything looks fantastic on the chart, and they see these coins and they come in here and they see this thing going up 59% for the day, and they see this thing going up 37% for the day, and they see this thing going up 3% for the day, and they go, wow, man, I'm really missing out. What I gotta do is I gotta get in here and I gotta start buying right away, obviously, because this thing is going up and up and up and up and up. Well, I can tell you from experience that what comes up must come down. And when you look at the chart, it's pretty easy to see that. But I really want to take a minute to take a deeper dive into what it is we're really looking at and how to properly understand what it is that we're talking about. Let me just pull out to the 1 hour. Here we go. Okay. What I was saying is that what goes up must come down. What I'm talking about is the price of an asset versus another asset. And when in this case, what I'm looking at is I'm looking at the price of NEO against Bitcoin. So when I come in here to this market and I come over here and it says my Bitcoin balance on the left and my NEO balance on the right, what we're saying is that NEO is my base currency that I'm trading in. This is what I am buying or selling. So if I want to increase the amount of NEO that I have, I would come to the NEO market and I would push the buy button. I would type in how much NEO I want to buy and how much I want to pay for it right here. So say I wanted to buy 1 NEO, okay? And over here, down here, what we have is we have the order book. And the order book consists of the bid-ask protocol. And I apologize if this is review for some of you. For some people, this is something that even having explained it to them, they struggle with. And I want to make sure that we're really going over this in the proper way. So we're trading NEO. We're trying to buy. If we buy in the NEO market, we're going to acquire more NEO for ourselves. If we sell in the NEO market, we're going to reduce the amount of NEO that we have. We're working in the Bitcoin market, so when we buy NEO, we're using Bitcoin to buy our NEO. And when we sell NEO, we're getting Bitcoin for our NEO. This is how much Bitcoin 1 NEO is worth. So if I wanted to buy 1 NEO, I would come over here and I would look at my asks. These are what people are asking for Neo. They're saying, I would like you to pay me 0.0077 bitcoins, or 700,000 satoshis, as it were. On the other side of here, so these are all orders that people have put into the market, and they're saying, I would like to spend this much Bitcoin in order to buy this much Neo. I'm going to buy 5 Neo, and the price I'm willing to pay, willing to sell my Neo at, because I'm on the ask side, I'm asking this much for it, is 698,000 satoshis, 700,000 satoshis roughly. Okay, so if I wanted to buy Neo at the current market price, I would come in here and I would look at my ask book, because this is what people are selling it at. So I come over here and I say I want to buy 1 Neo, and how much do I want to pay? Well, I'm going to pay about 700,000 satoshis. So when I click on this right here, it populates how much I'm going to pay. And then you can see that if I were to buy 1 Neo at 700,000 satoshis, this is how much Bitcoin I would pay. What you're looking at here is the fee involved in making this transaction. Okay. Now, where people get, and equally this is true, if I have Neo, you can see that I have some Neo here. If I click on the number right here, it populates my whole transaction to sell the amount of Neo that I have. If I wanted to sell at market price, I would come over here and I would say, well, somebody is willing to bid, somebody is willing to buy Neo at this price right here. How much Neo are they willing to buy? 1,185 Neo at 696,000 satoshis for a grand total of 8.25 Bitcoin. Okay, so if I were to come over here and I say I want to sell all of my Neo, I'm going to sell it at market price because somebody's willing to buy it from me at that price over here. And I would click this sell button right here, and I could sell all of my Neo at market price. Okay, now on some exchanges, and this is where things get really messed up. On some exchanges, you have your buys you have your buy button with the buy order book on the left-hand side, and your sell button with the sell order book on the left-hand side, on the right-hand side. And then on some exchanges, it's exactly reversed. Is you've got your buy book here, and then your sell book down here, and your sell order here, and your buy book down here. You got to pay attention to what it is you're looking at. If you're buying Neo in your Neo market, then you're increasing the amount of Neo. This is how much people are willing to buy it at. This is how much people are willing to sell it at. They are bidding this much in order to buy it. They are asking this much in order to sell it. Now, here's where things get even more confusing. Oh, with regards to the sums here, what you're seeing is you're seeing the total sum of Bitcoin that this market represents. Is as we go further down in the price that people are willing to pay, you see increasing amounts of Bitcoin that people are willing to spend, and increasing amounts of Neo that they're willing to do. So you can see sort of a buy wall happening right here, right around the 696,000 Satoshi mark. With the amount of interest in Neo jumping from 1.69 Bitcoin to somebody buying as much as 10 more Bitcoin for a grand total of, 11 more Bitcoin there. In this way, we can look at the market and say, well, look at where the market is right now. This is the current market price. So when I say buy or sell at current market price, this is what I mean. I mean coming in here and putting in an order at the current market price. Now, you don't necessarily have to pay current market price. Let's say that Neo's at 696 and 699. Somebody's willing to sell it at 699. But I don't like 699,000 satoshis. I like 650,000 satoshis for 1 Neo. Well, if I were to do that, what would happen is, let's pick one down here, 694, we'll say. Okay, I'm just going to go ahead and put this order in the market here. And I'm going to confirm my order. And what you're going to see is right here, here's my order. See where the buy order went into in the buy market book right here. Now, if the price of NEO were to come down from its present high of, I'm looking at the past, by the way. This is why price is wrong. If the price of NEO were to come down from 698,000 Satoshis, if it were to come down to, where did my order go? There's my order right there. If it were to come down to 694,000 Satoshis, I would end up buying NEO at that price. This is called a limit order because this is the limit of what I am willing to pay. I'm not willing to pay more than 694,000 Satoshis. So if I like NEO at a particular price, let's say I like it at this price right here, the 653,000 Satoshi mark, 652,000 Satoshi mark, well, I'm just going to cancel this order right here. Here's my open order that I've got. I'm going to cancel the order, and what I'm going to do is I'm going to say I like it much better at 652,000 Satoshis, and I'm going to buy NEO in this way. Okay, in this way, we don't have to sit here and time the market. This is the strategy about remaining profitable in the market and maintaining your longevity in the market is not about correctly timing the market. It's about time in the market. The way of the trader is we're doing opportunity generation when these things come down. Okay, what we're doing is we're saying, well, I don't like it at this price, but I think it could come down to this lower price right here. And if it comes down to this lower price right here, I think it could come up a little bit and give me some profit off of that price right here. Okay, so what I'm doing is I'm saying I'm going to go ahead and put my strategy into the market. I'm going to, go ahead and make myself set myself up for profitability at this particular price point, and then when I'm ready, I can come in here and I can equally do the same thing. Let's say that I think that NEO can go up to 745,000 Satoshis. Okay, well, I'm going to do exactly the same thing, except I'm going to come over here and I'm going to make myself profitable. Once I have purchased one NEO, I'm going to come over here and I'm going to make myself profitable at 75,000 Satoshis, and I'm going to push that sell button. And that order is going to go into the market, and then I'm going to wait for the market to come to me and make me profitable. Because I bought down here, and then I sold up here, and made myself profitable. This is how we work no-loss strategies. The idea is that we are going to come in here and figure out ways to set ourselves up to buy low and sell high and always be profitable no matter what, even when the market is going down. And sometimes that requires us to buy more in order to make ourselves profitable. And so next week what we're going to be doing is we're going to be doing deep dives into strategies that make us profitable no matter what, even when the market is going down and down and down on us, by ensuring that we're structuring our buying and selling in order to make us profitable no matter what. You see, it's not about guessing which way the market is going to go. What I'm going to tell you is that this market is going to do one of three things. It's going to go up from here, it's going to go down from here, or it's going to go sideways from here. And anybody who tells you that they can predict that with any regularity is a liar, or a fool, or a scammer, or all three potentially. Pay close attention to them and be very careful about giving them your money. Instead, listen when somebody says to you, you need to plan for this to occur. You need to plan for this to occur, and you need to plan for this to occur. You need to learn how to do proper planning in order to make yourself profitable in these markets, even when this thing goes all the way down to here. This is an important part of the way of the trader in executing no-loss strategies, is if you are not planning for profitability, if you are not planning for the ways in which this market can move, if you are not planning for zero down here at the bottom of the market, you are not going to be profitable long term. You're going to end up in a situation where this is going to happen to you, and you're going to lose all of your buying power. And you need to avoid this. This is about having us plan for profitability no matter what. Because we can make profitability in a market like this, even if we buy up here, and then we find ourselves down here. but only if we plan for it. If we start up here without a plan, and then we come down here, we're just a bag holder. That's all we are. There's no way out of that. But if we start up here with a plan, and we find ourselves down here, and our plan has us doing exactly the right thing the whole way down the market, well, then we can be profitable right here in the market. And this is the strategy. And this is where things get a little bit confusing. Because so far what I've shown you is I've shown you how to put your orders into the market and how to work a singular market, okay? Now, I'm going to come back here and I'm going to look at these markets and I'm going to point out something to you. Is whenever we talk about something, we talk about these, you know, the BTC Neo market, usually it's reversed, and this is the thing, is they just reverse it on you, right? Here, it is the Neo, you're buying and selling Neo against your BTC, okay? There's other markets. These are all markets in which a coin is being market made against Bitcoin. These are all markets in which Ethereum is being made against, which coins are being made against Ethereum. And these are all coins, these are all markets in which coins are being made against US dollar Tether, which is, again, the coin that I mentioned that is issued by the Tether company in exchange for $1. So it maintains the price of $1. Now, here we went BTC Neo, and when we clicked on Neo, BTC Neo, Neo was the coin that we were trading. Okay? Conversely, and so when we went to buy on the BTC Neo market, we were buying more Neo, and then when we went to sell on the BTC Neo market, we were selling our Neo. If we bought more Neo, we increased our Neo, and if we sold our Neo, we decreased our Neo. Now here's where things get confusing. If you come over here to the US dollar Tether market, you see that the coins are reversed. Here, we are buying Bitcoin against US dollar Tether. So what you're looking at is you're looking at the price of Bitcoin against US dollar Tether. We can see that the current price of Bitcoin against US dollar Tether is 4,180. So on the left-hand side, if I wanted to buy one Bitcoin and I wanted to pay current market price, I would pay $4,195 for one Bitcoin. It would assume that I would have some dollars available for doing so. Then I could push buy and I would increase the number of Bitcoin that I have. At that time, the number of Bitcoin that I have to buy Neo with would increase here. This is so confusing because when I bought Bitcoin in this market, then Bitcoin was on the right-hand side, and I was buying and selling Bitcoin, so I was increasing my Bitcoin over here. When I was doing it in the Neo market, the side at which the Bitcoin was on was reversed. It was over here, and so we were buying and selling Neo. This is a really critical thing that you just gotta sit here and work around in your head. When you're working in a Bitcoin market, you're buying and selling against Bitcoin. If you're buying, you're reducing the amount of Bitcoin you have. If you're selling, you're increasing the amount of Bitcoin you have. When you're working in a US dollar Tether market, you're working against US dollar Tether. If you're buying, you're decreasing the amount of US dollar you have. If you're selling, you're increasing the amount of US dollar Tether you have. It's just something you gotta live with. It's something you gotta sit here and master. And muscle memory is one of those things that we talk a lot about in the dojo. This is something that if you are not familiar with this, you will get tripped up the first time you go to see it. And then, to make matters even more complicated, there's these Ethereum markets over here. Here, we have the same thing, Neo, except we're buying and selling Neo against Ethereum. This is no longer the price of Neo against Bitcoin. This is the price of Neo against Ethereum, which has a completely different chart. Now, what I want to call your attention to is that a lot of these charts have similarities. a lot of these coins are very highly correlated. A lot of these markets are very highly correlated. And when you come and you look at Ether against US dollar Tether, and you come and look at Ether against Bitcoin, and you come and look at Ether against those two. Those are the two combinations. Don't fool yourself there, Sensei. Those are the two possible combinations in these markets. Is you come and look at Ether against US dollar Tether, you come and look at Ether against Bitcoin, you notice some very similar correlations. These markets are very heavily correlated, and comparing these markets is definitely a very valid technique. It's something that we're going to be spending a lot of time doing. And that's very much another aspect of the way of the trader, is paying attention to your portfolio, paying attention to the markets that you're in, paying attention to your opportunities, and making sure that you're creating those opportunities correctly for yourself in order to maximize your potential. Wednesday I talked about, making 1% a day. Do you think you're really going to make 1% a day every day in a market that's going down like this, over day after day, from the 12th to the 19th? We're just going sideways. We're doing all of this motion right here. No, it's not realistic. You need to set realistic goals for yourself. The 1% a day happens when you sit here in a market like this and you build up small amounts. You make tiny, tiny wins over time. You make tiny, tiny wins over time, and eventually those tiny, tiny wins end up into more and more amount of upside potential for yourself. And those tiny, tiny wins that turn into more upside potential eventually turn into even more upside potential as the price of them increases. If you are not prepared for these motions in this market, you are going to lose money. Having a plan for profitability means being prepared for these motions. And sitting here and having a plan means being able to sit here and watch the market do this on you and smile because you know that you're going to make all your money. Because you have a plan that's going to make you all your money. And staying disciplined to that plan will ensure that you make all your money in these markets. And so on Monday, we are going to start doing deep, deep dives into how to build these strategies for no loss trading plans in these markets. When I ask you to get out your spreadsheets, or I ask you to get out your piece of paper and a pencil, and I ask you to start trading on paper, and still we're not trading, we're sitting here learning how to trade, and I'm saying, okay, if we were here in the market and you bought, and then you came to here in the market, where would you be? I'm not telling you this because you're going to sit here and do this on a piece of paper and a pencil for the rest of your life. I'm telling you this because the act of sitting here and working through these strategies and working through the math and building this muscle memory around how these markets move and how your positions move and how the math works out in your head, instead of having to go back to the calculator, is going to become an invaluable tool. This is not a get-rich-quick strategy. This is a get-smart-quick strategy. And being smart will eventually make you profitable long-term. And that's how you will recognize your 1% daily returns is over a long enough time frame, because you were smart about it. Because you increased your intelligence, because you sat here and worked your strategy on paper until it was perfect, until it did nothing but make you money with your portfolio size no matter what. And that's what we're going to do together, starting next Monday, which is just a couple of days away. But until then, I need you to master your discipline over yourself. I need you to sit here and say, look at how much money I would have lost if I didn't have a plan. I need to have a plan. I need to have a plan that will make me money no matter what's happening. Because look, if you bought up here, you're not making money. There's no money to be made by purchasing up here and losing all this purchasing power down here. You need a better plan than that. And I'm going to teach you how to do that planning. But only if you maintain your discipline, only if you maintain your purchasing power, only if you maintain your strategy to stay profitable in these markets no matter what. And so I invite you to go over the weekend and master your discipline over these markets by staring at these markets and not trading them. I invite you to go and say, okay, look, if I had bought this much and I had sold this much, what would that have done without pushing the button? Because this is about building muscle memory. I invite you to do this on paper and figure out how much money you actually would have lost if you had bought Ethereum back in December, and then back in the beginning of September, and then gotten all the way here to the end of September. Build that muscle memory. The more muscle memory you build, the easier these strategies will become to execute. And as I teach you more and more and more of the progression of the strategy, you will need that muscle memory. You will need the ability to figure out your position in your head without having to constantly go back to the calculator. You will need to exercise that muscle memory about building your plan and then staying disciplined to that plan in order to stay disciplined long term. Because the minute that you deviate from that very idea, the minute that you deviate from the idea that you are going to plan your trade and trade your plan, is the minute that you become undisciplined. And the minute that you become undisciplined is the minute that you set yourself up to become unprofitable. And that's avoidable. If you want to make money in this market, you will plan your trade and you will trade your plan. And that is the way of the trader. And I very, very much look forward to seeing everybody on Monday as we begin our very intense deep dives into these strategies. And I very much invite you to master your discipline over your profitability as we move forward. And what that looks like is sitting here preparing to get down and dirty with some numbers on paper and build your muscle memory, where that muscle is the one above your shoulders. Thank you very much.